To a fresh new edition of Bazaar Morning Call. It's a Thursday morning. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, good morning. Things are looking a little dire on the growth front, and I think that will be the focus very much. So just to set the context, and I think the clearest indication that the market is now getting worried about growth is the fact that yields are sinking. They're not rising. I mean, they're not falling. They're actually falling like 9 pins. Look at the 5-year, the 10-year, the 30-year in the US. 13 basis points in the 5-year down, 12 on the 10, and 9 basis points lower on the 30-year yield. And this is not just the US story. It's happened in the UK last night. It's happened in France. It's happened in other countries as well. In some cases, bigger than what we saw in the US. But US is the big market, so just focusing on that. And that's going to be the focus. I mean, SGX Nifty futures indicating a flattish kind of start right now, 12 odd points or so after yesterday's very sharp cut. So we'll see how things are. But it's delicately poised, suffice to say, 15,409 on the SGX. Sonia, hi. Nigel, hi.
Hi, good morning, Prashant. Good morning, Nigel. And growing concerns of a recession, right, is what is dragging most markets globally. I think yesterday was a really important day because it just told us that the texture of the market is so weak. The back has broken completely that even a minor rally, it was what? A one-day wonder, as someone called it, right? A minor rally got sold into quite ferociously. So if you look at the levels to watch, for me, the important level is that 17 June low that we hit of 15,183. If that holds, then perhaps, the market could just gravitate around these levels. But if it breaks, then anyway, there's a fresh onslaught that we have seen across most global markets. Oil is down quite a bit as well. So that speaks a lot about how there are demand pressures that are kicking in. There's a 3% fall in Brent crude. There's been selling across from the FIIs once again. So almost 3,000 crores was sold in the cash market yesterday. And the Dow futures as well. The market rally has fizzled across the US. The Dow futures now are settling, but there's been, pressure over there too. So overall, there's nothing to indicate that there could be a convincing recovery in the market. If anything, perhaps pullbacks could come through as we've been discussing, but those could fizzle away as well.
Those could fizzle away, Sonia. It's looking a little tricky out there. And let me just tell you, and just to kind of build on what you said, the growth concerns. The Fed is now clearly indicating that it's almost a creeping kind of move, but it's creeped away all the way to the other end from saying that, well, things can be softish in terms of where the economy lands towards the harsher one. And I think you only need to look at Fed Chair Powell's testimony last night, where he basically said that we will have to hike rates more expeditiously than we thought before. It most likely will cause a recession, but this is necessary for price stability and long-term labor market stability as well. So I think this is as clear an indication as any it's both hawkish and dovish, because the Fed is saying that we need to do this because it's necessary, but it will cause damage as well. By the way, before Powell spoke, another Fed member spoke as well, and he kind of put numbers to this recession, which they are seeing. He said this perhaps will be 2 quarters worth. Right? This is Fed's Harker, who said that we could have negative growth for 2 quarters, for a couple of quarters. So I think this is becoming mainstream now. Some believe that the US economy is already in a recession, and it'll be validated later by data. Where is this showing up straight away? Commodities in a big way. So I think the question to ask is, are we going to see a commodity-centric disinflation? People are already using the words, straight from inflation to deflation, but inflation, disinflation, and then maybe the big D. So we'll see. But look at crude oil prices. They're down $14 in the last 1 week. In the last week or so, this is pretty large. You look at something like a Bloomberg Commodities Index, which is sold off. It's below the 100-day moving average for the first time in 2022. You look at something like copper prices, which have broken multi-month support levels as well. I have just 3 examples. So I think it's very clearly showing up in commodities, which is not bad news from the medium long-term perspective for a large importer like India. But the economic impact and market impact is very different. It benefits the economy, eventually does show up in the markets as well. But for now, this is a sort of almost synchronized lower move across risk assets. Commodities are a part of it, and that will put pressure on equities here as well. So let me just quickly run you through the Nifty setup. I said this yesterday. The move that we saw from the 17th to the 21st of this month was about 500, 600 points on the Nifty. That sharp bounce that we saw very recently, the 61.8% Fibonacci retracement of that is 15,383. Which is, by the way, exactly yesterday's low. I mean, actually 15,386 or so is the low yesterday. I think that needs to be defended first and foremost for more pain to be avoided in a sense. I think on the upside, there are many levels we can talk about. 15,700, of course, clearly is that big number which held through March, May. It got broken, taken out, and I think that becomes a bit of a resistance once again. So